Hi, welcome to this video today, which is all about winning Forex trading strategies, which a lot of traders obviously want to learn. Now, in terms of what is the best strategy to use in Forex trading, there's no single best strategy. There's a few that are worthy of consideration. But the one I'm going to go through today is certainly worth considering if you are really serious about making money from the Forex market. So we look at the thinking in terms of market movement and the techniques of George Soros, one of the most famous and successful traders ever. Now, the techniques we'll look at are not complicated. They're simple. They're easy to understand why they will work and continue to work. And you can apply them in your own methodology. We're huge fans of George Soros here. Now, in terms of what I want to do is I want to go to a storyboard. I want to review the techniques in a little bit more detail. And then when I finish reviewing the techniques, I'm going to finish off the video with 10 of my favourite quotes from George Soros himself, which I think are educational and very motivational as well. Right, let's go and review the techniques. Right, let's have a look at the trading techniques of George Soros, which are very much based upon an understanding of double feedback loops and trading them. Now I'll explain what they are in a moment. If you understand what they are, then you will see why he made so much money. Right, now, first of all, I'll just go through his views on technical and fundamental analysis, so points 1 and 2. Technical analysis, he says, is of limited use in trading, and the reason for this is that the fundamentals are not discounted in the price. Now, if you look at what most people say about technical analysis, they'll just say all the fundamentals and news will instantly show up in price action. Okay, so all you need to do is follow price action. You can make money. Soros says this is totally wrong, and he's right. Actually, I'm going to go through his logic in a moment, but I just want to go through his view of fundamental analysis as well. Now, he says all traditional economic models are wrong. Okay, and what he means by that is that when you've got traditional fundamental analysis, it's all about the supply and demand, let's say, for a currency pair, and it should move to that supply and demand equation. But all traditional economic models ignore that humans actually determine the price. If you've got humans determining the price, they don't act rationally. Okay, they can push prices too far up or too far down, as we've seen throughout history. Now, in terms of point number 3, Soros said market price is subject to distortion that doesn't reflect reality. Now, in terms of his thinking, he said he never assumes that the market price is the right price. He always assumes that it's wrong. Now, we've all heard that wise saying, market price is always right. It's only right in respect of that is the price right now. No trader would actually take a trade if they thought it really was the right price. Okay, but Soros always assuming the price is wrong, but how wrong is it? What he wants to do is catch big bullish extremes, big bearish extremes in the market where traders have bought or sold too much and go against them. Now, in terms of one of the main points that he stresses about trading, and this is why technical analysis, all known fundamentals are not reflecting the price, is because of feedback loops, and it's a double feedback loop. So I'm just going to explain what a double feedback loop is. Let's say you've got a very bullish news story. Let's say a central bank is raising rates and that currency then goes up. Okay, so traders influence the price, don't they? Because they're going to buy the currency. Now, is that discounted in the price? Soros says no. Why won't those traders who've bought maybe buy more as the price goes up because they're in profit? Other traders who see the price go up might want to get in on the action, not be left out. So you've got buying of the currency well after the news event has come out. Now, in terms of a double feedback loop, it can get extreme. And I'll give you a really good example of an extreme. Bitcoin. Traders influenced the price, of course, by pushing it up. But as it went up more and more and more, the price loops back to traders to bring more into the market. It got so bullish, and then basically, we all know what happened to Bitcoin. It collapsed when everyone said, it's going to the moon, basically. Traders have got carried away. Intelligent people, many of them, many people lost a lot of money. That is what Soros is looking for when traders kind of lose sight of reality. Now, in terms of your trading in the Forex markets, you want to catch big bullish or bearish extremes, go against the majority. That is what Soros did. Now, what type of markets are you looking for? You're looking for a market with very high volatility. That will mean there's a lot of speculative interest in that market, and it will normally be all over the news. So just think back to Bitcoin, okay? The key question is, what are traders anticipating? And is there a sort of basis of, how would I put it, substance behind what they're anticipating? Like with Bitcoin, there was no substance behind why prices were going up. It just went up too far, too many traders in, and it collapses. To give you an example of, a recent example, been trading the British pound, and suddenly you had a lot of traders selling on the view that the UK was going to have a hard Brexit. There was no evidence that there was going to be a hard Brexit. Too many traders came in short, and then you got the inevitable rebound. Okay, they're anticipating something that possibly is not going to happen. There's no evidence for it. You very often see this when a currency pair is moving strongly in one direction or the other. The media, who have to tell stories, will start anticipating what could happen next. You then know that basically it could be all about to end in terms of that currency's move. You can use a chart to measure a bullish or bearish extreme and when to come in against the majority. Okay, if you look at any big price spike in a short period of time on any Forex or in any Forex pair, the price spike will normally retrace a good portion, all the portion, or more, because too many people have bought or sold, and it immediately comes back. And you've got great risk reward in terms of if you trade these turning points, because when traders exit the market, it's normally very quickly. Okay, it's crowded when you've got a bullish extreme with longs or a bearish extreme with shorts. A lot of traders have very tight stops, so when the recoil back comes, you will quickly be in profit, and then if you're wrong, you'd only have a small loss. Now, in terms of timing bullish or bearish extremes, yes, you can use technicals and look for a defining candle. We like to use the COT net traders positions to back up whether a bullish extreme or bearish extreme is going to break. You can learn more about them if you don't know what they are by joining our mailing list. Plenty of ways of doing it. Okay, now in terms of risk reward is fantastic if you go against the majority at the right time. Okay, now let's go to Soros's hit rate. How many trades did he actually win? Not many. This guy called Stanley Druckenmiller, another famous trader who was with Soros at the Quantum Fund, and he said, I learned something from Soros which I didn't think I would learn, which was that his hit rate, i.e. the amount of trades he got right, was worse than random. It was about 40%. But he didn't care. Why? Because his risk reward was so good. 3 to 1, 5 to 1, sometimes even more. If you've got a 5 to 1 risk to reward, you can get 4 trades wrong, still break even. And Soros, just with the under half of his trades being right, piled up a huge amount of money. Now, in terms of when you're doing contrary trading, the key is to know when to quit. You must have the quit point, your stop, and you just basically walk away if you're wrong, okay? And this is something that Stanley Druckenmiller also said about Soros. He was the best loss taker he'd ever seen. He never complained, he never got angry. If he took a big loss, that was it. He was just so confident that he would get the money back. Now, too many traders are focused on winning as many trades as they possibly can. You don't have to. Soros proved it. Okay. Now, in terms of Soros, and many great traders will stress this, patience is the key. You do not want to be trading all the time. You see all these people on YouTube sitting at the screens trying to day trade and scalp. They don't make any money. Day trading and scalping doesn't make money. Okay. You don't get paid for screen time in Forex. You get paid for being right. And yeah, Soros said you just wait. And only when the time is right and everything lines up do you go for it. Okay? And the key point in terms of Soros's success was also he loaded up his trade. You hear a lot of people talk about, oh, I made 100 pips in something. It doesn't matter. What's 100 pips? It's irrelevant. It's the amount of money you've got on the trade, not the amount of pips that you've made. If you've got 0.25% of your account and you make 100 pips, not a great deal of money, is it? You've got 5% on the trade. That's a lot more meaningful. Okay, Soros would bet big. He couldn't see the point of not. I mean, he wasn't reckless, okay, but he bet a meaningful amount. He didn't diversify. Didn't want to basically just trade for the sake of trading. He would just hit big. Let's say the trade that broke the Bank of England, that was $1 billion in profits. And when Druckenmiller was saying he was going to put 20 million on it, Soros just turned around to him and said, put more. That's not a trade. You need more on it. Now, obviously, they had a lot of money. They never risked more than 10%. This is Soros when he's at the Quantum Fund. But they made massive profits by doing big trades at the right time. They didn't do that many. It's a key point to keep in mind, okay? Analysis and price watching. I've already mentioned price watching. You don't be watching price all the time. In fact, when you see all these people on YouTube and they've all got about 20 computers, Soros only had one. He admitted that he hardly ever looked at it. He's after the bigger moves. They're the ones where the odds are on your side. You're not trading noise, on an hour chart. How simple is his strategy? Pretty simple. I mean, he wasn't a mathematical genius or anything like that. If you read his books, read articles of him, interviews, you can see his strategy was basically simple. And I think all great strategies are. I mean, you can incorporate all these points in your trading method and make money with them. And we've basically taken these points on board. And we've made profits over the years. Obviously not as much as George Soros, but we are very pleased with our results and consider ourselves competent traders. Right, that is the video for today. Hope you enjoyed it. Join our mailing list for more info on Soros and other great traders. And now, as I said at the start of this video, I'm just going to finish off with 10 quotes from the great man himself to finish the video. Thank you very much for watching me. As usual, take care and have a good day.